I totally agree with that philosophy that yes, economies of scale is the way to go. If you're going to do it at all, do it on a bigger scale, but get the right team together. Managing 300 unit apartment complex is no joke. You got to have a team in place, have economies of scale in your team. One person shouldn't be doing all of that.
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor! 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 Doctor!
Now, here's your host, Dr. 𝐓𝐢𝐻𝐿𝐻.
Hello, everyone. Welcome to another episode of the Physicians and Properties Podcast. I'm your host, Dr. 𝐓𝐢𝐻𝐿𝐻, and as always, I am so glad that you're here. Before we get started, can you do me a favor? If you have not yet left a 5-star rating and a review and subscribe to this podcast, could you take 5 seconds and do that before this episode continues? That helps us grow. That helps us get more listens and helps more people hear the good news about how real estate and entrepreneurship can give you the freedom to practice medicine and live life how you want to. So thanks for doing that. This episode is a great one. We talk with Dr. Shameem Nazeer all about practicing as an ER physician. We hit a bit about burnout, wellness, and some things that she learned during that process. We talk about real estate investing as a whole, kind of the idea behind why real estate investing may be a better asset class than some other investment opportunities or retirement opportunities. And we talk about how that led to her considering single family homes, small multifamily investments, and then how she ultimately became part of some syndications and raising capital for syndications in a fund-of-fund model. She is also the owner of the Doctor Investor and has been putting on these incredible events where she's been teaching physicians and healthcare workers on the benefits of real estate investing over in Texas. We talk about 3 awesome development opportunities that she's working on right now, as well as another cool fund. This was a really cool podcast if you're just getting started or if you've been investing in real estate for a long time. So without any further ado, let's get started with today's episode with my new friend, Dr. Shameem Nazeer. Dr. Shameem Nazeer, it's so good to have you on the Physicians and Properties Podcast tonight. How are you?
Great. Thank you so much, 𝐓𝐢𝐻. Pleasure to be here.
Yeah, well, the pleasure's all mine. I'm really looking forward to learning more about your journey and learning more about you. Thanks for taking the time. I know it's pretty late over there in Dallas, so I appreciate you staying up to record the podcast with me. How are things?
Oh, things are great. I'm an ER doctor. I've been in emergency medicine for 24, going on 25 years. Yeah, we're used to staying up all sorts of weird hours, so this is totally fun.
Hopefully this is way less stress than working in the ER.
Yeah, I think so.
Awesome. Well, do you mind sharing a little bit about yourself to the folks that are listening?
Yeah, I grew up in Houston, Texas, and I did the traditional route, went through college and medical school down there. I did my residency in Chicago, and then I moved to Dallas back in 2000. I was married at the time, got divorced, but anyway, had a couple of kids along the way. I worked at a lot of different hospitals in the Dallas area. I've worked at the county hospital multiple years, just Parkland. I've worked at Dallas downtown area. I've worked in the more suburban hospitals. I've even worked a smattering of freestanding ER, so I had a lot of different exposure. I've always loved emergency medicine. It was my first love in medical school. When I first found out about it, I thought, oh, wow, this is exactly what I want to do. I was very happy practicing emergency medicine. I think probably around end of 2021 is when I really started getting burned out. I was really questioning whether I could continue. And I think it was a lot of different factors. As you might know, as a physician, there was a whole COVID pandemic and volumes plummeted, then volumes skyrocketed, and it was just this roller coaster. I don't know. I feel like there was a lot going on around that time that just made it really challenging. That happened, and then I started just really thinking I've got to cut back. That was the only way I felt like I could really take care of myself. I went part-time for a few months or maybe almost a year. I realized I really couldn't because I didn't have any source of passive income. I mean, we put all our money in our retirement accounts, and then there's really our paycheck and to do everything else. I had 2 kids in college at the time, and they've since graduated, but all of those pressures, I went back to full-time work. And then I started looking into what else could I do outside of my job. I've always been really attracted to real estate as a side venture. I started looking more into that and things kind of developed from there.
That's awesome. It does sound like emergency medicine, certainly a passion and tons of different experiences and so many different facilities. I'm sure you have some good stories. Be thinking about a funny ER story because I love hearing those. I think so many of us kind of 2021 really hit hard with the pandemic. I was actually in residency during during that time and into doing a lot of inpatient and ICU. It was not anything that any of us were expecting. I know the ER also certainly got hit hard, and it was a lot of anxiety, a lot of unknown, and a lot of work. So it's completely understandable from that perspective to experience burnout. I think you hit a really good point too of a lot of docs are stuck in this kind of golden handcuff situation where they have a great job that probably pays pretty well and they're contributing to the retirement accounts. There's nothing really else outside of that. You experience that. I think that passive income in some capacity can be a defensive metric too for like, hey, I'm feeling pretty burnt out and I want to cut back. Like, hey, you have that passive income coming in to supplement that. Sounds like you figured that out fairly quickly and started.
No, I figured that out. I just never anticipated that happening. I enjoyed my job, and emergency medicine is a little bit more flexible than some clinic jobs. You can work somewhat less if you wanted to, pick up extra shifts if you want to. So there was a little bit, not complete flexibility, but some flexibilities. I really felt like I was okay. To your point, like we don't really know until we know that we need that side income or passive income or some sort of reserve. You're just living life and things are fine until something happens in your life, whether that's burnout, whether that's a financial emergency or a health emergency or family member situation that requires you to step away. That's when you really find out that, hey, I haven't built anything on the side. This is it. I've got to go to work. I think it's really so awesome that you're starting so early and you're still already thinking about it. And these podcasts are great because when people hear about all these conversations, we learn so much.
I absolutely agree. I love doing the podcast because I get to network and learn so much from folks like yourself and other guests on the podcast. It's just been such an awesome opportunity. I hope that there's medical students, residents, and young attendings who are out there listening too, who are like, hey, this is kind of opening up my eyes to some possibility, or hey, I need to think about this a bit sooner in case some of these emergencies happen, burnout happen, financial situation happen. It's really important. Thank you for being willing to share that and share your journey. When you decided to go back full time and then started stacking up the passive income assets, what was that like for you?
Well, it's still happening. It's a slow journey. And I think that's another thing that I try to emphasize when I do talk to people or even do my own marketing or posting. It's like, this is not a get rich quick and nothing's happening fast here. It's really misinformation sometimes out there that, hey, just invest here and you're going to be a millionaire. That's not how it happens, especially in real estate. That's the good and bad of real estate. Real estate is a very stable asset that doesn't lose value tremendously fast. And it's not like the stock market either. So you're not going to go crazy and make millions overnight. That's the beauty of it. It's something, it's tangible. It's a real asset you can invest in. You can watch it grow. You understand the mechanics of it. You can really do well, but it takes time. My passive income journey is in its infancy. It's not quite there yet. But what I love is that I've created the business around it that's more than just the real estate. It's really about doing what we're doing here, like really networking and creating a physician community and educating and inspiring others. That's really almost more important to me than the real estate syndications or other things that we are working on, because I think that's another side gig. Essentially, there's a business component to it that is not really just tied to real estate. It's also tied to the education piece. I've got both of those going on. But yeah, no, I don't have passive income yet. I am still working full time. That's the other thing I like to share because I think it's the reality. It's not like I'm home free. This takes time. And you got to stay in the game. You've got to keep learning and keep growing and do things slowly because it's just like anything in life. Things that are worthwhile take time to build.
Absolutely right. You hit on it too, kind of the education piece, that networking piece, other folks learning more about this and the potential of passive income in some variety. I also think that like it's going to make such a big difference in patient care as well. A lot of times folks hear this podcast or hear similar ones and think we're talking about getting enough passive income so we can never practice medicine again. Maybe some of us that's the case and that's great. But some of us, it may just be, hey, I want to work one less shift, or I want to stop moonlighting, or I want to be able to spend more time with my patients and be able to tell my practice manager, like, I'm not going to see that many patients and here's why, and those sorts of things. So think about it from that spectrum. It can be really helpful. The passive income itself is almost kind of a misnomer because there's really not like truly passive income. There's some more passive investments and less passive investments, but it's definitely a spectrum. Sometimes folks get wrapped up in like, hey, I'm just going to invest, like you said, in this one deal and hit it rich and never have to work again. I've tried a couple times and that's never worked. I've realized that
it's about the capital appreciation. It's about the slow growth. It's about maybe building up your retirement account. That's what I really emphasize to people. For me, especially, it was really about how can I retire sooner? I looked at my retirement account and it was growing growing at 2% that year. And I was just like, wow, like this is going to take forever. Yeah. I was like, what do I do to really boost that? Putting a portion of my portfolio in real estate felt like the right decision for me, because if I'm getting 12-15% even on real estate syndications, that's like way more than what I was getting in the stock market. I'm not suggesting anyone put all their eggs in any one basket. We've got to diversify. If you can put a little bit in something that's growing faster, it's an awesome idea, and it helps you build up your retirement so that you can retire on your own terms when you want to. That's the goal. And I agree with you. I don't want to necessarily, I don't encourage other physicians, nor do I think that I would just, completely move away from medicine. It's a wonderful profession. We're privileged to be a part of that. It's just been an honor to have been granted that in life. Not everybody gets to be a physician. I feel we really take that for granted. We like to bash it a lot because things are not so great sometimes. And that's true. It's real. Everybody gets sick of their job, no matter what job you've got. But it doesn't mean that we need to throw the baby out with the bathwater. There are really good aspects to what we do, and we enjoy it. That's why we chose to do it. My goal is really to remind people of, why did you become a family practice physician? Let's talk about that. Let's remember that there is a reason, and there's something that really needs to go that route. Let's not lose sight of that just because of our EMR and our metrics and all this other nonsense that we're always dealing with. I agree with you also on that. This is part of the wellness journey. For me, it grew out of that need that I needed to be taking care of myself better, because just all the night shifts back and forth. We go like from days to nights and night to days all the time. It's very tight in the ER. You really don't get days. You're just not supposed to be sick, but if you are, it's really tough to get covered. You're not really taking care of yourself. You don't really have the room to. That's kind of where it started for me. How do I take better care of myself? And having some passive income, some sort of alternative income stream, no matter who you are, even if you're not a physician, let's say you're a teacher or an engineer, it's for anyone, because you're going to, no matter what profession you're in, you're going to have potential life changes or emergencies where you, for some reason, need to step back or you need alternative stream of income. Building that and considering that, I think, is just important for anyone. It is part of being well so that you can live a more balanced life.
Fantastic answer. I want to sit here for a second, if it's okay, and talk a little bit about kind of the burnout you experienced and wellness just in general. What were some things, if you don't mind sharing, that you learned from that, or some different things that helped you as kind of whole person and wellness get back to where you were ready to go back to practicing medicine full time?
Well, I think it was first need. I had to go back. But I think also what really helped me is just sort of putting things in order, whether that's my personal physical health, whether you're eating right, exercising, prioritizing my sleep and all of those things. I just sort of pushed through all the time. And I didn't really you keep thinking that, I'll just get through this one more shift, or I'll get through this week and it'll get better or whatever. And you're just always moving along. What I've really, this year especially, have started to do, I hired a fitness coach. And this is so funny because we all know what to do, but it was just that accountability and just staying on top of it and really making that a priority for myself. Even the business alongside my full-time job was taking up a lot of my energy. I've hired an executive assistant to help me with that. Just admitting that, hey, I can't do it all. I've got to create a support structure and a network of people that can support me in these things. I think sometimes physicians, we think that we're supposed to save the world for everyone and be everything to everyone. It's about recognizing my own limitations and where I could also benefit from someone else's guidance. I didn't think that I would need a fitness coach. I've had trainers and people like that, but I feel I know how to eat right and exercise. What else is there? But when you have someone else kind of coaching you on something, it's a different experience than you just knowing that in your head. To really put that into action and implement that, it does help sometimes to have a coach or someone support you through that process. That really helped me to acknowledge that I have limitations and then I need some help sometimes taking the right steps and getting that support.
The accountability is so big. What you hit on with the fitness coach is someone just keeping you accountable to your fitness goals probably made all the difference.
He's really good. I'm starting a little podcast as well. I was thinking I'm going to have to interview him. He's such a big part of my wellness journey. That is so huge. We don't really think about, I've heard other entrepreneurs and people, experts in this kind of field, talk about coaching being such an important thing and mentorship, obviously, but finding the right person who can really support you that way. Sometimes it's a lot of trial and error until you find the right people. It's really an important thing to prioritize.
Yeah. What's something that you look for in a coach or a mentor or something that's been helpful for you on this journey?
That's a tough one. I don't know if I've really evaluated that, but I think it has to resonate. You've got to jive with each other. It's a tangible, concrete criteria, or it's just something subjective that works. Even my assistant, for instance, is I've hired multiple either VAs or other types of people to sort of support me in the past. And it just never worked out for some reason. The person I have right now, it's really clicking. It's just a personality fit. Maybe it's a values fit. There might be other things that we could narrow it down to. But for me, it's sort of an intuitive, subjective sort of feel.
That was critical for me to be like, hey, I got to give some of these things up, or I have to get some help. I have to delegate in order to elevate. I've been working through that right now as well in our assisted living business with our two other partners. We're just kind of hit that season where it's like, if we really want to grow, it's time we have to bring someone else onto the team. We're working through that right now. It makes all the difference though. This podcast, for example, I have a great VA, Anna, and I would never be able to do this if it wasn't for her. And so I'm very grateful for her. I think sometimes you just have to be willing to ask for help. As physicians, we really like to have the control of everything, do everything, and be a part of everything. Being willing to let some of those things go can be really helpful and help your business grow and help you have that time to then go to the gym or do some more wellness, things that are beneficial for you.
I think you're not really even serving the business when you're doing it. In order to be truly creative and really develop the business and do the things that you're best at, you've got to hand off some of those other tasks. I think we try to be cheap about it, especially when you're early on. You're like, I can't afford that. You probably can't afford not to have those things in place and get the right people in.
Exactly. It's a challenge for sure to find the right folks, but when you do treat them well, it's definitely worth it for sure. I know you discourage working with some financial advisors about real estate, and I kind of want to hear a little bit about that and how that discussion went. And then let's talk about your journey into real estate and why you like that as an asset class.
Yeah, for sure. My financial planner is a super nice guy. I'm not trying to say he's completely wrong in all aspects, but he really very much discouraged me from ever purchasing a rental or going into real estate of any sort. And when I wanted to invest in syndications, he was like, no, that's financial suicide. You're wrecking your entire retirement plan and so forth. I just disagreed. I wanted to try, and I wasn't putting my entire retirement portfolio into real estate. I was just like, I'm just going to move a tiny amount to do something with. And I just thought it was a little bit too extreme. I think everybody has different philosophies. There's nothing wrong with it if that's what you believe in. For myself, didn't agree with that. We had to part ways, and I kind of went on my own and did my own thing.
What real estate do you like, or what intrigued you about taking a piece of your retirement towards real estate?
I don't know. I guess it's a very common thing. People enjoy real estate. I think a lot of people do. I like the fact that it's a real asset. It's something I can actually touch and feel and go visit. I love the idea of whether it's a development or a value add, you really get to have some tangible understanding of what's going to happen with that. It's just very tangible and understandable. And I like that about it. And of course, we've all lived in real estate. We have this personal experience of being inside real estate, whether it's a hospital, whether it's your home, and we all relate to it. Very ancient. Probably the first asset out there was land. The others are probably just more esoteric, whether you're investing in stocks and bonds or whatever. It's a little bit harder to understand. My own father also had rental properties or has rental properties still. I'd watched him do that. He basically earns passive income on his rental properties, like single family homes. I had that example as well. That always intrigued me. Initially, I was going to get single family homes right after the pandemic when the prices were sky high. I was looking for homes, and I had a realtor friend. We went around looking for houses, and these were so overpriced. I still put in a couple of offers and they got rejected. It was interesting. I'm kind of happy they got rejected. I also joined a mentorship program for acquiring small multifamily. I did that for a little while, for a few months, where I was marketing direct to sellers to acquire small multifamilies, like 8 to 10 units or something like that. The more I got into it, I realized, wow, this is going to be a full-time job. I'm going to be managing this property and this asset by myself alongside my other full-time job. I didn't feel that was going to be great. I was actually continuing to do that until I met people who were syndicating large deals. And they basically told me that to get a small multifamily like that, you're going to be heavily involved and it's going to take a lot of time and energy. I kind of got convinced to drop that and get involved with larger syndication. I invested in 2 or 3 myself, and then they asked me to raise capital, as a lot of people do. I started learning more about that, and I created the Doctor Investor, really sort of as a meetup group or something. I didn't really have a full-fledged idea of what it was going to look like, but we just started creating these events, and that's when lots of sponsors started reaching out to me online. That's how we got involved in doing a fund of funds for a couple of development deals.
What a cool journey. When you think back about the small multifamilies, do you feel it's significantly more work for you now working on these syndications as the small multifamilies? Or do you feel like, hey, economies of scale, I'm putting in less time or the same amount of time and effort for a much bigger return or much bigger future potential?
There's potential. I'm not acquiring the property. So far, my model is a fund of funds where I'm basically pooling capital and investing acting as a limited partner through the fund, or the fund is a limited partner. There's so many aspects. I guess that's one thing I find surprising when I talk to other people who are new at the whole syndication model. They are raising capital, they're learning acquisition, they're learning asset management, they're doing a lot of different things. And I feel each one is a whole subject in itself, right? It's tough to really become an expert at all of those things and then do it well. You may eventually, but it's not something you're going to master overnight. My model, I think, is better suited for me, where I'm doing one thing at a time. Right now, I'm raising capital, and we're raising it as a fund of funds. And mostly what I do is raise capital and basically do the marketing and outreach for that. I'm hoping as time goes on, we'll do our own deal, or I'll maybe get into the acquisition and management side. I'm not doing all of those things at one time. I think you asked me a question.
Basically, yeah, what I was getting at is like buying a small multifamily property is going to be just as difficult as buying more.
It's so much better. I totally agree with that philosophy that yes, economies of scale is the way to go. If you're going to do it at all, do it on a bigger scale. But get the right team together. Managing 300 unit apartment complex is no joke. You got to have a team in place. Economies of scale is great, but also have economies of scale in your team. One person shouldn't be doing all of that. If you have the right team, it's definitely the way to go.
The beauty of having a team or partnering with folks is like you can work on the things that you're really good at and you really like doing. You don't have to be the property manager, but you enjoy talking with folks and raising capital and doing the marketing side of things. That's what you really enjoy. So why not be able to focus on that, which it offers you that ability to do that when you're working in some of these larger deals than if you were buying a small multifamily and having to do all of it yourself. So yeah, it's a really cool opportunity. For folks who are listening and they don't know what a fund of funds is, would you mind explaining that to them?
Of course. A fund of funds is basically when an operator or sponsor is acquiring a multifamily, let's say they're going to buy a large apartment complex, they're going to set up an LLC, which is the primary fund. What I'm doing is creating another LLC that is pooling capital. I'm getting a bunch of investors into that LLC, and that LLC is then investing into the first one. It's a fund into a fund. It's a fund of funds. It's a terrible name, but that's what we're going to call it. And it's basically the exact same structure as the original fund. You still need a private placement memorandum. You need all the basic agreements and an investor portal and all of the other things. So you're running it just like a syndication, and I'm the general manager of the fund. And then it's just investing in the larger deal.
What are some benefits of doing a fund of funds model instead of just investing by yourself? Like me just investing $50K into the deal instead of investing it into the fund of funds.
Well, as you might know, most operators would love large checks as opposed to small checks. So if you've got to raise $10 million, getting a bunch of $50,000 checks to raise $10 million is harder because you've got to manage so many investors. They prefer to get 10 people with $1 million checks versus a bunch of people with $50,000 checks. When you're a fund, you can say, hey, I'm going to bring in a larger chunk of capital at one time, like one big check. They're happy with that, and they'll give you preferential treatments. We usually will negotiate a better profit share, and then we can pass that on to our investors. As a fund manager, you can also take a portion of that to manage the fund. Like in our case, since it was my first big raise, I didn't take any management fees, but technically you could take an acquisition or management fee to run the fund, which is actually probably a good idea because it costs money to support the other administrative parts of the fund. We have an independent fund administrator as well, and they're paid a flat fee to set up the investor portal and do the fund accounting, and they file the papers with SEC and other things that they need to do. They maintain an escrow account for my fund. When people invest with us, I don't receive any money. It goes into this escrow account. It's all really nice and tidy. I think that's why people probably have some sort of management fees to support that kind of activity. Basically, the nice thing is you're leveraging your numbers and you're getting a better profit share. And sometimes in larger funds, they could even get certain voting rights or other kinds of preferential treatment with the sponsor. And that's the main reason. The other thing that's nice on our fund side is that because I'm the fund manager, I have reduced the minimum for people or made other adjustments to help them get into the deal. That's kind of the other advantage. My control over the fund is that we do our own due diligence. We have our own fund administration, and then we can decide where to put that money. We can also adjust the minimum or do other things like that to help our investors.
That's great. Economies of scale within a fund basically is the way. We have a fund for assisted living, which has been awesome, a very unique experience. I agree. I didn't realize how expensive it is to get a fund set up and keep it running and everything else as well. We didn't take any asset management fees or acquisition fees either. We learned kind of the hard way of just how expensive those things are to get set up, but it's okay. We're going to just keep on raising it and offering fantastic opportunities, and it'll be all worth it in the end. That was an unpleasant surprise about how expensive.
It's all about the long game.
Exactly.
You want to stay in this game. What you really want is repeat customers. You want your investors to be happy. You want to build that trust and credibility. That's kind of how I see it. It was my first raise. I was like, whatever it takes to keep the investors happy and make sure they get what they need. We're all going to win at the end as the deal does well, and doesn't do so well, we'll all do what we do. But basically, we're all in this together. We're all in the same boat. I'm not running away with anything, and I'm not getting anything.
Right.
All of that was just really build that credibility and track record. You got to do that first. My other big core value is really providing value, because you've got to provide value first, and then you can expect some returns down the road. But I want to make sure that we're doing the right thing.
I'm all about that abundance mindset. It's going to come back, and there's plenty of deals and opportunities and money out there.
Oh, yeah.
There's no reason to not. What are some things that you learned about on your first raise, or how did that go for you?
Gosh, it went really well for my first raise, but what did I learn? I think I learned that it's all about trust. These were mostly people I knew, people I've worked with for years, and I'm very plain. We didn't do a real big pitch. We didn't even have a pitch deck, which was really funny because some people would say, can you send me the pitch deck? And I was like, well, we don't have one because the sponsor didn't have a pitch deck. They were also just talking to people about the deal. I was just surprised because I had seen so many pitch decks by then. We'd just talk to them. We'd just be like, yeah, sure, this is what we're doing. We'd show them basic deal, but it was just very much one-on-one conversations. We did a lot of just one-on-one conversations. We didn't even have a webinar for the first deal that 𝐻𝐿 won. We didn't have a webinar. We just basically talked to people one-on-one. And my fund administrator was so awesome because he knew the deal from the very beginning. He knew I was new at it. So we just have a 3-way Zoom call with each investor that was interested. Chat with them about the deal and say, hey, if you're interested, let us know. It was very low key. I really enjoyed that experience. I think that's kind of what I like about it, is that when I do talk to potential investors, it's not like, hey, this is the deal. Do you want to invest? It's more like, hey, tell me about yourself and this is what we're doing. And it's very low key.
Well, I think that's big too. You want to make sure that the opportunity fits for them. And sometimes we've all been in those situations where we felt something's been really pushed on us, or you can tell like, hey, they're really trying to sell me on this, and that doesn't really make me want to invest. If you take the time to get to know someone and figure out like, hey, what are their goals? What are their long-term goals? Are they looking for cash flow? Are they looking for equity? Are they looking for tax benefits? Is this deal going to benefit them in that capacity of what they're looking for? And if not, being willing to say like, hey, I don't think this is the right deal for you. For one of our recent raises, we had a similar situation. We had a doc who really wanted to invest with us, but he was really looking for as much tax benefits as he could. He didn't really care about cash flow. And this situation, I had to say like, hey, man, I'm really sorry. I appreciate that you want to invest with me, but I don't think this is the right deal for you. It's hard to say no to people who want to give you 6 figures or whatever it may be, but I think that it goes back to that mentality of like, hey, we always want to provide value and we really want to take care of our investors. I want them to be repeat customers in the future, repeat investors in the future. So it's worth it for sure.
That's exactly what I was thinking too. This is not your first and only encounter with that person, hopefully. It's just the beginning of a relationship. So you really want to nurture that relationship and just make sure that, first of all, you guys resonate with each other, you see eye to eye, and hey, this is a deal. There's many out there, but this is one we like, and here it is. But that's not the end of the conversation. It's not transactional. It's a relationship. And that's so important. I agree. Sometimes it's just not the right fit. I've had that experience too, where I just don't think it's a good idea for that person to invest with me. And I'm thinking maybe next time, but this is not a good fit. I totally agree with you. We have to be sensitive to that and look at the person behind the money. It's not just about this transaction and can we make our raise, but it's about taking care of them.
Absolutely. What are some deals you're working on coming up?
We currently have our development. It's in partnership with Rustigar Property Company, which is a developer out of Austin. They are building a high-rise in Dallas Uptown. It's a 27-story luxury high-rise. We're raising for that. That's a pretty cool one. We just finished the raise for the project in 𝐻𝐿, Texas. 𝐻𝐿, Texas is a small city just south of Austin, and they had 300 acres there. They did a master plan community that they're developing still, but that was our first one. We have this high-rise. And then we started the MedInvest Income Fund. We started that really out of conversations with investors. Investors wanted cash flow, and we had these development deals that weren't going to provide cash flow. These were great for long-term growth, but not for immediate cash flow. And people wanted something that was shorter turnaround time. This is essentially like a debt fund. It's providing short-term financing to operators, and it is providing a 10% annualized return that's paid out monthly. It's just a nice little cash flow option to complement our other deals. So that's kind of what we're working on at the moment.
At the high rise in Dallas, what's the timeline for that to be completed?
It's probably 5 to 7 7 years. It's going to take a couple of years to build, a couple of years to stabilize, and then to sell. They're hoping to break ground next year, probably the first or second quarter of next year. That's kind of the timeline.
What do you have planned for the Dr. Investor? And by the way, fantastic name, how you got that domain name too. It's awesome.
I felt so lucky. I thought for sure everything was taken. I tell the story a lot to people because I feel it was such a lucky thing. I was literally like 11:30 at night looking for a URL at GoDaddy, typing a variety of URLs. And nothing was coming up. Everything I was choosing was taken. And I was like, damn, this is going to be hard. Then I put down the drinvestor.com and I was like, wow, that's not taken. I was super excited about that. It worked out well. But yeah, it's a great name. Honestly, the Dr. Investor is just like a whole nother business that's not even tied really to the syndication. I really consider it the marketing and educational arm of that. We do education and marketing for the funds, I guess, in a way, its own entity. And what I'm really hoping to create is more smaller events. We did like a bunch of small events so far, but we're going to be more strategic about that going forward and really hope to provide better value in those events. So that's kind of the next thing for the Dr. Investor. And then our podcast, which you are welcome to come on.
We'd love to.
What I really want to celebrate on the podcast is just physicians or other professionals who are in business and investing. Like, what are you learning? What are your struggles or good and bad aspects of your journey? And just talk about those kind of things that are just happening out there. I think there's so many physicians that I hear about all the time that are either starting a new business or they're investing or they're creating things. That's what we'll focus on going forward in the next few months.
And what do you like about the events that you guys are doing? Or what do you think the value is of having these events?
It's great to just meet people. I actually love meeting people. I have a lot of friends and I enjoy just getting together with them and they enjoy it. It's sort of an excuse to come and sit with your colleagues and have a nice meal and learn something around investing or real estate. It's just a wonderful environment to collaborate, network, and learn something. People really enjoy them and it's been a really great experience.
It's a great opportunity from a networking perspective for sure. I tell folks often, I'm like, hey, if you don't have a real estate meetup near you, that is such a great way to become the voice and become the contact in the area, and the deal potential you can get out of that and the ability to raise capital out of that is incredible, and it's absolutely worth it. If folks are listening and they're thinking about like, hey, there's not a real estate meetup or a physician meetup near me, take the leap to start it because it's going to be super beneficial. It's networking on steroids, but you get to kind of be the face of it. The Dr. Investor gets to be the face of it. It really helps from a growth perspective, which is awesome.
I think it's been very well received too, even though it's so hard for people to come to these things. I don't know how we fill the room, quite honestly. It's tough for physicians. They don't want to leave work and go someplace to network, even if it's a great place, even if it's a really awesome event. It's tough. You're taking time away from your personal life to do that. I'm just really grateful people do find so much value in it that they do come.
Well, if folks want to reach out to you, they want to learn more about the Dr. Investor or investing in some of these deals you're raising capital for, how can they do that?
They can reach me on, I have a LinkedIn profile, obviously, Shameem Nazeer, and then my email is shameem@thedrinvestor.com, or you can just look up the website at www.thedrinvestor.
We'll include those links in the show notes for folks. Really excited to hear how the raise goes. Would love to join you on your podcast sometime soon. And thank you again for taking the time to come on here.
Thank you, Alex. It's been great.
Thank you. Well, with that, it's been Dr. Shameem Nazeer and Dr. Alex 𝐻𝐻𝐻 with another episode of the Physicians and Properties Podcast. Signing off. Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are 2 main ways that a podcast grows. One is through ratings and reviews, and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only. It should not be considered financial, medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.